Hello, everybody. I'm James Leichter, founder and president of Aptora. I appreciate you being here today. Welcome. Today we have a special guest with us. Her name is Jennifer. She's with Propelr. I'll let her explain the rest. Jennifer, are you there with us?
Hello, I'm here.
All right. Who are you?
Well, I'm Jennifer. Thank you for having me and letting me crash y'all's webinar today. Like I said, I'm Jennifer. I'm with Propelr, and I work with merchants like yourselves to help you better understand credit card processing. It's one of those things that's very strange and weird and confusing, and often is a major pain point for merchants. And so, I want to make sure that you guys have an understanding of what that means and how you might be able to be in a better situation.
Ah, good. Well, let's cover Propelr. I take it you don't sell propellers. So what does Propelr do?
We don't, although I think we ought to. We do credit card processing. So that's anything from ACH transactions to running credit cards to PCI compliance, and making sure that everything runs very smoothly.
Okay. Well, I understand you have a few slides you want to go through. Why don't you go ahead and get started, and I'll sit back and leave you alone.
Okay, that sounds good. That sounds good. Well, guys, I'm really excited to be here with you today. We do have a section for Q&A at the end of this. So if you have any questions about maybe your existing processing, how we work with Aptora and why we're here, please feel free to add those in. I love questions and answers. And then there'll be a way for you guys to reach out at the end of this. But today is way more informational, right? It's going to be more about what is payments, what kind of things come up, surcharging, how to be compliant. And this time of year, we see a lot of scams. And so I want to give you guys the way to identify if there's a scam coming, identify if you're doing things the right way, and how we can maybe find a way to get you some savings. So that's really what we want to talk about today. And on the next slide, I think it's just kind of like an overview of all the things I just said, so we can keep going. And talk about, part one is understanding how to read a statement. So if you go over to the next slide there, it's going to talk about the role of a payment processor. And all of this here just says that our job is to make sure that the payments that are being entered from your clients are one, correct, right? Making sure that it gets through to the bank, it gets processed and approved, the money's there, and then it goes right back to you. All of that seems to happen in a matter of seconds, and there's a lot of moving parts in there. So the role of the payment processor, which in my case is Propelr, but there are a ton out there, is to make sure that that flow is very seamless, and y'all don't have to worry about all of those other moving parts, because to you, the person uses their card and then it gets approved and the money's in your account the next day, right? That's the perfect world. And we want it to continue to be that easy. So really making it as simple as possible to be that middle person. And it, like I had mentioned before, it's ACH transactions, it's debit transactions, it's credit card transactions. It could even be tap to pay with your phone, or Apple Pay on your computer. I'll tell you, I am a creature of convenience. So if I don't have to dig out my wallet, I'm not gonna. And I love being able to be able to bypass that. So really making sure that you as a merchant don't have to worry about taking payments and getting your money, because you've got a ton of other things to worry about, and that's our job, right? So, moving on to the next slide is going to be more about your statement. You guys probably see this, you get it in the mail, it's in a file folder, and I often compare this to an electric bill. And it's because, like, listen, I don't know what a kilowatt is or why I have to pay 13 cents per kilowatt, but that's what my statement looks like to me. And that's often what business owners see this statement as. And we try to make it as easy as possible. And they're all different. So at the end of this, there'll be a QR code and a way for you guys to reach out to us. If you want, we can give you a free statement analysis and show you how to read your statement. But we're going to go through what our statement looks like today, because a lot of them do look like this, right? A lot of them are going to have this nice color coding, and it's very simple. And so understanding how to read your monthly statement is the very first step in making sure that you are in the best situation possible. So this is going to show you the key things to look for, maybe some vocabulary and, other things that would be good to know about your merchant statement. So on the next slide, it's going to be a zoomed in picture of the top right there, which is the part that says account information and statement period. If we could go on to the next slide for me. There we are. Perfect. So obviously Rita's hair salon is not real, but she is on Curly Lane and that's fun. But your some important things to have to note on this is on the right-hand side. This is not a bill. It's correct. It's not a bill because they're going to automatically take the funds out of your account. So this is just telling you, hey, this is what came out and why it came out. So really important. You don't have to pay anybody double. If anyone asks you to pay double, that is incorrect, guys. It'll tell you the time period of the statement, and that's important too because it should always be a full month and you'll know how much is being processed in that month and you can match it with your records, right? The next thing is the merchant number, and it's a merchant ID. So if anybody, you're logging into your portal, your access system, if anyone asks what is your merchant ID or MID, that is what we're referring to. And that's like your identifier. Merchant identification number, that's what that is. And it's super important to us because that makes sure that your money goes where it's supposed to. It's specific to that account. Let's say you have multiple locations or multiple businesses. Those are each going to have their own MID, right? And so we want to make sure that those are separate. So that's a really good one to make sure you know what that number is. Highlight it, write it down on a Post-it, put it on your desk. It's a good number to have saved somewhere. And then any customer service information, right? So your basic customer service information is going to always be at the top of a statement when you're with a really good processor because they want you to be able to talk to the right people to make sure that you're getting everything done that you need done, right? So that's the top page, the top portion of the statements are honestly often forgotten and not really looked at. And that's something that I think is super important because it's got a really lot of valid data in there. And so the more information you have there, the better. And then when moving on, you're going to have the next section, which is going to be a good summary. On to the next one. Perfect. And so with this one, it's going to be your summary, right? So it's just the second part of that first page that we saw, and it's going to have the details, right? So you have the total amount submitted, right? So that's how much you processed. If you see something like third-party transactions, that's going to be American Express. American Express, as we all know, is kind of on their own little island. They're a little bit weird, and they like to just put themselves alone on their own little island. So that's going to be American Express. And then you'll be able to really see what the fees are, the total here, and the total amount processed. Now, thing to keep in mind here is like, this is a really good summary. This is going to tell you, you can find out your effective rate by doing this and seeing these things, and that would be your overall rate. It's not going to be very granular, but this is a great place for you to just do some quick math and take the total fees divided by the amount processed, and then that's going to be telling you what your overall percentage is. And that's an important number to know because it really shouldn't be that high. And so as we are first looking at statements, and if you, like I said, you're welcome to reach out to us. We're happy to walk through what that looks like. But we're going to tell you, well, first off, your effective rate is, maybe it's 5%, and that is outrageous. We're going to fix that. Let's figure out how we can fix that. And we'll go down into the weeds of it. But the very first thing that I always like to recommend is let's find out what the effective rate is. So this is where you can do that pretty easily. And again, that's usually on the very first page of the statement. If it's buried somewhere, they're hiding something from you, and that's not really good. So, moving along onto the next page is going to be more of the batch summary. And this is going to be your daily deposits, right? So this is how many transactions you did on which days, and, it's going to list everything out. So in this example here, it's going through the 17th of the month. And so every single day, it's going to say, this is how much was submitted. You can take that back and match it with your bank account, right? You'll have online reporting as well. That's fantastic, but reading your statement seems to be a big pain point. So being able to match it up here with your accounting system is fantastic because you can say, okay, cool, this is how much I processed. An adjustment here in that fourth column, that's kind of a purpley, I think it's purple. I'm going to go with purple, is going to be for like refunds. Let's say you processed a refund. So that way you have just like the most clear records. We want to make things as easy as possible for you to be able to match things up because like I said, y'all have way more important things to do than have to try to figure out and match up books. It's just not something you should have to waste a lot of time on, in my opinion. Moving on, you're going to go next to the summary card type. And this is going to be, you guessed it, how kinds of cards were taken in which volume. I'm going to be 1000% honest with you guys. This part is not super duper important unless you're taking a ton of Amex. In this example, fake statement that we have, they're taking 1/3 of Amex. And so it's important for them to know how much American Express they're taking, because we all know that Amex is a little bit higher. But more often than not, that distribution is going to be very different. We often see that American Express is about 10% of all retail sales. So it's not going to be something that's used that frequently. But it's just kind of nice to see, okay, well, how much was Visa? How much was Amex? How much was Discover? Really not a whole lot of data you can use with that, but it's just good to know that you have it broken out in case you ever were curious for whatever reason. And then moving on again to a little bit farther down in what the statement would be. And just as a heads up, guys, this would be maybe like 3 or 4 pages. So we're taking out the chunks in the pertinent information and showing it to you here. But this is the batches. This is what actually gets put into your bank account. What I like about this section is that it'll tell you the average ticket size. And this is kind of cool to know, because if you have you have units that are $10,000 and you're like, yeah, I sell $10,000 units. That's great. But what about your service plans? Because if your service plans are $80 a month and you have way more service plans than units being sold, then it's going to be very different. And you'll be able to see your average transaction size. And I think that that's a really nice metric to have and to know what that really looks like. And then you can see and use those metrics for your growth plan, right? In other areas of your business. So I think that's a really nice tool to have. If we keep going down the page and moving on, then it's going to show you any chargebacks, which are honestly a bad word in our industry. We don't like them. I know y'all don't like them. We don't ever want them, but they happen. And so if they happen, they'll show up here. And this is where you'll see them. You'll also, just as a reference for Propelr's sake, we let you know if there's a chargeback in 3 different ways. One is going to be in snail mail, because that's how the card brands do things still. And then you're also going to see it in your portal, and you'll also get an email. Okay. So there's all sorts of different ways, because we want to make sure that you are the person who is responsible for the chargebacks. We want you to get your money, and we know that you're doing things the proper way. So we are going to help you fight that battle. But if there are any chargebacks, they would be listed here for your reference to see. No action is needed there. It's just kind of saying, here's where they are. Then we move along down to the fees section. This is the part that people get most confused about, and it is very confusing. It's very strange. But there are different components that come up with credit card processing, and there's a thing called interchange. It's a weird phrase, but that's what it is. And you'll see it here on the type. It's interchange charges. And that's what comes from the card brands. So that's Visa and MasterCard's cost, their wholesale cost. And that's something that we will help you to understand, is like there's the wholesale cost, and then there's a plus portion that the bank is making extra on. And that's kind of where we break that down and show you what kind of savings might be available to you based on what you're being charged. This fees page usually is the longest out of any merchant statement, and it's because they're making things very itemized. Our rule of thumb is to have it super transparent for you. We want you to know what kind of cards you're taking and why it's charged X amount of dollars and those kind of things. So here you'll see, like, even to the very specific kind of MasterCard that's being taken. It says MC-BUS level 5 data range 2. That's a MasterCard business card. That's a level 5, which is a very expensive one. It's probably one of those that is metal and it makes noise when you throw it down. It's very heavy probably, and that's going to be an expensive business card. And that one, we're able to match that up with what is public. If you were to type up MasterCard interchange rates, you can see, and it's going to match exactly. And so we want that to be as transparent as possible for you to see what those rates are. So that's statements. I'm a big nerd and I love that stuff. I think it's super fun to go through and really find out where we can save and cut costs. You know, we're here in the new year. A lot of people are a new year, new me. And that could mean saving money, cutting out subscriptions you didn't know you had. Personally, I'm doing that myself, going through my bank account, seeing how many streaming services I signed up for last year. And this is just a way to be able to cut some of that fat as well. So super fun thing for me to do. I really enjoy it and welcome it if anybody here would like a review of that. But I'll stop talking about statements for now, and let's go on to scams, which isn't much more of a fun conversation, but it is something that we should all be aware about. So most common scams that we see here, especially during the holidays, onto the next slide, we kind of got 4 different ways that we can see scams happen. Um, and different things that you'll hear are going to be like a package delivery scam. You guys probably gotten a bunch of texts for that. I'm getting phone calls and texts about different things. Your UPS package has been delivered, these kind of things. A lot of those times they may tie it to your merchant services account, and it wouldn't even be your provider, right? So like, let's say you were using Propelr. It wouldn't even be like, oh, this is Propelr. They would just say merchant services. It would just say merchant services is here and we need to validate something, enter all your information. And you should never do that because that's not your real provider. We often find that to be the most common that we see is like you might get a phone call and they say, hey, your PCI compliance is out of date and we need you to send us some information and we'll fix it for you. And when you do that, when they fix it for you, quote unquote, they actually are signing you up for another merchant account and you had no idea. And then you have two merchant accounts and you're paying money you didn't need to have. And so all of these scams are horrible, hate them. And we just want to make sure that you're aware not to partake in those, right? So the text scams are a big one and the gift card scams are a big one. So they may say that they have a gift card, give you a number for your services for a gift card number over the phone and it doesn't work, and then give you a fake credit card number. So just be aware. There's a lot of kind of sketchy stuff that happens this time of year. So just be more aware and more cautious. And if you're ever unsure and you get a call from something called merchant services, call your provider, go to your statement, go on that top part that we looked at that has a phone number on it. And that's the number you're going to call with that merchant number and say, is this real? Because I'm going to tell you 99% of the time it's fake. And it's better to be safe than sorry. Okay. So just protect yourselves and your businesses there. Next thing I want to talk about is going to be surcharge. And surcharge is all that means is that you're passing the fee on to your customer. So we've got more details here on the next page that's going to talk about what that actually means and how you can do that. So you may see it depending on where you guys are at locally or whatever. You go into a store and they may have a sign that says, like at the register, it says like 3% applied when a credit card is used or something like that, right? Or a cash discount. You get a discount if you're using debit or a cash, right? And all of that is to bypass the merchant processing fees. So all the fun stuff we talked about a while ago, that's what it's there for. It's to bypass that, put more money back in your pocket. It's becoming increasingly popular in y'all's industry as well, where you will see that passing that fee on, that 3% on to your end user is way more important, way more prominent because they're using a credit card. Y'all saw that card type that was outlined, that was an expensive, heavy card, right? So that is expensive for you to pay. So a way to offset your fees could be to surcharge. And all of that is passing that fee on to your customer. So adding that into your invoice, right? Having that in there saying if you want to pay with a credit card, it's going to be an additional fee, and it allows for that, right? So you can do that on any card type, and it's only assessed to credit card transactions. If they use a debit card, that's considered as cash. So there's a no fee option there if they still want to use a debit card. And it allows you to change it too, right? So you have the ability to go anywhere from 1% to 3%. Let's say that you're paying 3% and you want to split the cost with your customers. You could say, I'll pay half, you pay half. Really, really a different kind of way of doing things is to do it that flexible way. But if your payments partner, your payments provider is open to having those conversations with you and working through the pros and cons, I recommend having that conversation. We certainly would tell you, if in your area, in your industry, if that makes sense for you and what we see most often. One other really important thing is that nothing you guys do should be locked in and keep you there, right? So what I mean by that is, let's say that you pick to do surcharge, and then in 3 months you say, hey, this is not working. We've lost customers. People are really upset, and we just can't do this anymore. That's okay. You should be able to switch it with no issues. If your merchant services provider has locked you into something, that is not a good sign. And that's definitely a thing we want to take a look at and see if we can help you wiggle out of that, because you should never be locked in to anything. You should be able and willing to leave, because your processor should be working every day to keep your business, not locking you in. Just keep that in mind. Everything should be super flexible. Okay. And as we move on, we're going to talk about the last thing, and then we'll do questions, which is PCI compliance. So PCI compliance is also a huge pain point for a lot of folks. This is funny. Before I started in this industry, I've been in credit card processing for about 13 years. And before I did that, I did like cybersecurity and I did PCI compliance for a lot of people. And I just kind of talked about it. I never really helped anyone do it. And I would be like, yeah, it's super easy. It's going to take you no time at all. And honestly, I couldn't have been more wrong. It is a lot of questions and answers. So I apologize to anyone who ever talked to me years ago. It's a lot of questions that are very in depth and technical. And it does become a big hassle and a burden because you're taking this quiz a million times and not being able to pass. And we find that a lot of business owners will just be like, whatever, I'll take the fee because there generally is a fee associated with not being compliant. And that's just not the right way to go. So if we move on, it'll tell you a little bit more about PCI compliance. And that's just saying the best way to describe it is like, it's like the HIPAA of healthcare, but it's like the HIPAA of credit cards. Okay. So it's making sure that the card data that you're taking is stored properly. It's going through the right proper channels and that you're not writing it down on a piece of paper and putting it in a folder forever and ever. Hopefully, fingers crossed, no one's doing that. And it's being all very securely monitored. All that means is that it's protecting your customers' credit card information. That's all it is. What we do at Propelr is we walk you through the process of becoming compliant. You have to do it once a year. You just answer 38 questions and we walk you through it. I said 38, that sounds scary. My guys over here, they're going to do it in 5 minutes with you. They're going to tell you the answers and make sure that you're good. The reason that we can do it that way is because Aptora has done the heavy lifting and done all of the legwork to make sure that that process is super simple for you guys. So it just takes like 5 minutes. It's super easy and it's great. And then you're good for a year. And then the next year, all you have to do is say nothing has changed and you're good again. And it's awesome. We really like to make that not be a pain point because it's one of those unnecessary junk fees that a lot of our competitors out there in the space use to just bump your rates and your fees more and more. And it's something that's so easy to do if you have the right assistance. So we like to make sure we help you with that. And there are companies out there that can help you with that as well. So really want to make sure that this is completed. But that's enough about PCI. That's pretty much the end of my spiel. The next page is just that QR code I talked about earlier, which is a way for you guys to get in contact with us. This is just going to be all of the information about, or like just a lead form, right? So it's just a form to put your information and we'll reach out to talk about, any of the basics, how to read your statement, anything we went over today. If you have any more in-depth questions you don't want to ask here in an open forum, we can do that too. But that's about it. I'll pass it back to you.
I wanted to ask you about the surcharges. Have you had much pushback on that, or rather, have you heard from contractors that they're getting pushback on the surcharge?
It depends geographically where we're at, right? So some states really love it and some states hate it. So I think that the Midwest seems to be the most that I hear pushback from, only because they're the nicest. but they just don't want to put that fee on, and it is becoming increasingly popular across the United States. So I think that as time goes on in the next few years, we'll see less and less pushback on that. There are some contractors that are like, no, I know that this is a cost of my business, and I'm okay with that. There are some contractors that have already baked it in and already factored in, okay, well, this is my cost of doing business, so I've got to make that increase, and just didn't know that they were already doing it. So it's really interesting to see the trends change geographically and over time, how many more people are adopting that surcharge model.
One thing I tell contractors is to consider all of these fees a cost of goods sold. They should be a line item on your income statement. And let's say that they represented a cost of 1% of revenue. Well, if you were just to raise your prices by 1%, then you would cover that. And you could further that by saying, well, it's 1% of revenue for the service department, but it's only 0.25% of revenue for the install department, where we generally don't take credit cards or something like that. And you just build it into your pricing the same way you might build in health insurance.
Yep, that's absolutely correct.
I'm curious if there is a super expensive credit card out there. Is there a card that you know of that's like way more expensive than any of the others?
Yeah, so Amex is known to be the most, or it has been known to be the most expensive. Their top tier credit card with rewards is 2.87%. And
Wow.
that seems like it's really high, and it is high, don't get me wrong. But you think about all of those rewards cards. If anyone pulled out your wallet right now, you probably have a rewards card and you have a general credit card and you have your debit card, right? So you pull out your rewards card, and for me, let's say that's my Chase Sapphire preferred card, right? Super cool, but there's a fancier one called a Reserve, and that one is actually 3.32%. And what that is the 3.32% that comes from Visa to have that card is actually paying for those rewards that I would receive, right? And it's like, oh, you get 5% cash back. Well, that doesn't come out of thin air. It comes from, unfortunately, you guys, because that's what you're being charged. And so that's one of those things that there's so big of a matrix for the different kinds of cards being issued and used that it can vary so differently. Now, not a lot of, we don't see that card very often, but that is one thing. Another point to make is international. You're using a lot of international cards, that does have an increase.
Is there a limit to how much these cards can charge?
They make adjustments twice a year. So there's a spring and a fall release. And when I say they, it's Visa, MasterCard, Discover, and Amex. And what they'll do is they'll make adjustments twice a year. One's in August and one is one is in April and one is in October. So we all keep an eye out on your statements, because that is a moment where they'll tend to do a rate increase. And we're getting close to that the April release, the spring release. But those card brands will make those adjustments on there, and it'll be listed in your statements. And it may say 0.0002% increase. So the interchange rates, the cost from the card brands doesn't change that much, to be honest with you. And the only time that you see a new rate come into the market is when there's a new card in the market, but there's usually not that much higher than a 3.5. You're not going to see that unless there's an international fee attached to it. But I will say that keep an eye. That's a good point for the scam, and I'm going to piggyback off of you there. Is that often you'll see that the processor will also add money on that time that there's the announcement on your statement. So in April, your April statement will have a disclosure. It'll say fee disclosure on it, be a long thing, and it'll say the card brands are changing their rates. But in super fine print, it will also say that the processor might be changing their rates as well. So keep an eye on that, guys.
Are there any regulatory bodies that are involved in approving these increases?
There is, yep. So it's going to be the PCI Council, but also there's a lot of legal ramifications as well. So we see state by state some different legalities and different things when it comes to surcharge, right? So some states allow it, some don't. Sometimes it's illegal and you have to call it something different. But there is going to be the PCI Council. There's the card brands themselves, and they have their own little organizations. It's kind of like whenever you drive and you see a gas station here and a gas station here, and one's like a penny more than the other. That's how Visa and MasterCard are. They never want to outbid each other, but Amex is on their own world. But like the other brands, they're all kind of like on the same corner, and they want to make sure that they're the most fair to everybody.
I see.
Especially with the increase of like peer-to-peer payments and crypto kind of coming up into the world to be payments. And so by peer-to-peer, I mean like a Venmo or Zelle. Those are kind of taking a lot of credit card transactions away. And so the card brands themselves don't want to be put out of business there. So they're never going to overprice themselves in the market.
To my knowledge, when someone hands you a MasterCard, you have no idea which it is, right? How much it's going to ultimately cost you, do you?
Yeah, it's one of those things that you just really don't know unless it's a debit card. You're really not sure what kind of card it is. And so you kind of just roll with the punches. And when you have a merchant services agreement that's going to be maybe a flat rate structure, sometimes that might be better. Or what we looked at on the statement example that we showed earlier, that was interchange plus, that's the wholesale cost plus a small fee. And those usually tend to be more beneficial for larger merchants than having that flat rate.
I see. Are there any settings or preferences that people often miss in their gateway? Are there any secrets you know of that you can share?
Yeah, the more information you can put in, the better, right? So what I mean by that is, you can enter your credit card number and the shipping information or the billing information. Make sure you do a zip code. By putting in the zip code, that may drop you a few basis points. right? Because it's qualifying. And, you could do an invoice number. So there's certain fields that we can add in because the more information that Visa, MasterCard have to validate that the transaction is legitimate, the better the chances are, which means the risk goes down. The percentage that exists is because of the risk involved. It's a credit card, it's loaned money, right? So it's not real. We're Visa's hoping that the college kid that got the card in the mail is going to pay it back, right? So you have to think of it that way, is that the higher the percentage is because the higher of the risk associated with it. So the more information you can load in there, the better.
Okay. Yeah, I would say to our clients out there that have our software, we would be willing to add other fields that we don't have if it turns out that information would make it cheaper for them. So debit cards doesn't cost you anything to process.
It costs you barely anything, and I say it that way because there is, of course, a fee associated with it, but it's like 0.05%. So
Okay.
it's like 5 basis points. It is so small, and that is honestly the best way to go. And the way that we used to talk about it with surcharge is it being considered as cash is because a debit card is tied to a bank account, which guarantees the funds are there. With a credit card, we can't guarantee the funds are there because it's essentially a loan.
And how about ACH?
ACH is great. We love it. It's just check processing, right? So that's a really, really great tool. It's very cost effective, generally like a very small per item fee. So you may see like $1 per ACH processed. The downside of ACH that we've found from a lot of providers and like the communication we've received is that the funding timeframes are longer. So where credit card and debit card transactions are next business day funded, ACH takes 3 to 5 business days. So if you need speed to funds, ACH is probably not the way to go.
Okay. Do we have any questions, Will?
Yes, we have a few questions.
I didn't want to keep talking if there were questions waiting.
You want me to read them off to you?
All right.
How does Propelr integrate into Aptora? Do you get the best pass-through rates? Is there tap to pay options, etc.?
Great questions. So I'll go in order as I'm looking at these two, which is great. So we integrate through Aptora through a gateway, and a gateway is just what we would call like a bridge between us and Aptora. So Aptora has built out an integration with this amazing gateway that connects all of the dots for you. And so that's a very simple and smooth integration there. You're able to do all of your processing directly through the software without having to do any kind of double data entry. It's great. Everybody gets the same pass-through rates. So anyone who tells you that they can get better pass-through rates is trying to pull the wool over your eyes. So this is something that's the interchange that is public. You can go and Google it, Visa interchange rates or MasterCard interchange rates. And if you ever are having a hard time falling asleep, you can just print out all 600 pages of that and read it. And that it is all every single processor gets the same rates. So if anyone tells you they have better interchange rates, they are wrong, guys. Okay, they're not. They're trying to lie to you. And is there tap to pay options? So this is something that's coming soon. I know that we're working on that integration, so that is coming soon. I don't have a date for you yet, but hopefully we can follow up with one.
How does Aptora handle surcharges in the system? Is it added to the invoice? Is it separate, etc.?
Yeah, so it would be added to the invoice, right? So when you're doing the invoice out to the client, you would want to make sure that you're adding in whatever percentage, right? If you remember, we said it could be flexible. Let's say you want to go higher or lower, you can add that in there. So you'd want to do it at the time of payment, so that way the disclosure is there and that they are aware of what that charge is.
Just to be clear, we've talked about a couple things. The Jennifer's company can add that surcharge through that program she was talking about earlier. And then you also have an option of adding something to the invoice in our software, any software for that matter, if you prefer doing that. It doesn't happen automatically, though. We don't have a system that automatically adds a surcharge to the invoice.
The next one is ACH integrated into Aptora through Propelr?
It currently is not. That is something that is on the docket for this year, to my knowledge.
Does a payment through Aptora have to be connected to an invoice, or can you take a deposit that stays as a credit?
That's a good question. I would actually direct that to you guys over there. I'm not sure.
Yes, you can take a payment and not apply it to something, and it automatically becomes a credit for that customer. So if you just receive a payment against nothing, it creates a credit, and that credit can be applied to anything in the future. To give a more complete answer, I want to throw something out. In mobile, you can't take a down payment. You can do that in the desktop, but not in mobile. But that's something that we really need to add. So the gateway, I have a question about the gateway, Jennifer. The gateway is charging you the what's the term for the fees that the gateway is charging you?
And gateway fees.
Oh, just gateway fees. Well, I could have guessed at that. Okay.
Yeah, so the gateway does have a small fees associated with it, and it's usually just going to be a monthly fee.
Okay.
So that's something that's not too terribly horrible, and something that's attainable, and that's something we would make sure is known when getting someone set up, right? So we want to make sure that there's full transparency. You know what to expect.
Okay. Other questions, Will?
We have a comment from Brian. He said it would be nice for deposit payments to not hit your AR account too. For example, go into an escrow account instead of reducing your AR.
Yeah, so we can actually set something like that up, right? So we have that kind of idea around the escrow accounts and those kind of things. It would result in a little bit of finagling with the onboarding, but that's something we can walk you through and deposit into several different bank accounts.
All right. Other questions out there? Credit card processing is definitely an expense to keep an eye on. The national average net profit for a HVAC plumbing company is 2.49% according to IRS data, which is roughly what you're paying for credit cards. So it's definitely an expense to keep an eye on and be sure you're recovering it. Jennifer, is there any difference in credit cards when it comes to disputing a charge?
Good question. The general answer is no. I will say that we find that Amex users and Amex as a whole is way more consumer focused than business focused. So they are going to fight tooth and nail for that end user that's done a chargeback than you would see from Visa, MasterCard, Discover. So it's a little harder to win an Amex one just because they're always going to be more on that consumer side.
I see.
Mm-hmm. It's a nice perk if you're a consumer of Amex, but a little bit of a pain for y'all.
Do high volume companies get better rates?
No, that's a myth. So the card brands, like I said, it's all public. That doesn't change unless you're Walmart. It doesn't change. And that's an unfortunate thing that I think that they were looking at trying to make it kind of into buckets to where the higher volume could qualify for lower interchange rates. But it's just not something that's ever been created. Now, I will say that a higher volume may result in lower fees from the bank, right? To where you have more leverage there. So definitely make sure that you're negotiating and using your power there. But more often than not, it's the same.
Okay. Now, this is a trick, not meant to be a trick question, Jennifer, but I wanted to take an opportunity to let you tell us what's the difference in payment processors? Why should anybody care?
Yeah, that's a good question. In theory, you shouldn't have to care because you should hope that everyone's taking care of you the same way. But it's very much like a used car kind of environment, a used car sales kind of environment where you don't know if you're getting a lemon or not. And it's hard to do research on a processor because they're all like you go and do reviews and they're all not great. What I would say that's important to look for in a good partner is response times, and the transparency, right? If you feel like you're being sold, then that's just, in my opinion, and this is me in everyday life too, not just here, but if I feel like I'm having to be sold something, then I don't want it. Because if I'm having to be sold it, then it's too good to be true. There's something wrong. There's something there. If I have to sign a lengthy agreement that says if you leave, it's going to cost you $500 to leave before the 3-year agreement is up, that's not for me, because that means I'm being held hostage. So response time is super important, in my opinion, because it's your money. And if you don't get a response from somebody within a reasonable time frame, and you don't have a deposit, you're missing deposit, you missed payroll, something's happened, that's not good, right? So you need a partner in this that cares about your business. And I think that's really important. And the ways to identify that is transparency, making sure that you're getting active response times from your payments partner, not having to sit on hold for hours and hours just to find out that you called the wrong number and have to call another one, and people who want to just help you succeed.
I will say this, there are software companies out there that we compete with that demand you use their credit card processing system. It's built in, you don't have a choice. You either use it or you don't have that built into your software, and that's where they make quite a bit of their money. At Aptora, we don't restrict the credit card processor. That system is completely opened. We don't care. We don't have a dog in that race.
Yep, and I think that's really great that you guys have done that, because you're right. If I feel like I have to go with you, I'm not going to want to go with you. It's kind of like the teenager you tell to go clean their room. They're not going to want to do it because you want them to do it. It's the same mindset, and so giving the optionality makes it great, and it also shows that that you guys aren't pushing them to go one way or another, and that they're open to take whatever avenue that they want.
To be frank with everyone, it's tempting. We don't make money when you run those cards, and our competitors do. And it's tempting to be like them, but we've resisted that because we want people to have choice. But then we're just stupid like that.
The optionality is good. I think that's why you have such a wonderful, loyal base.
All right, final questions, Will?
Don't think we have any others.
No? Don't see any more, Jennifer?
Nothing over here.
Okay. Well, I appreciate you being on here with us, Jennifer. Thank you. It was, I'm sure everyone will agree, it was a nice break. Normally they would just listen to me.
Well, thanks for having me. I'm happy to join anytime. This was really great. If y'all have any other questions, reach out to the team at Aptora, and I'm happy to chat with you. Anyone on my team would love to the opportunity.
Thank you. I appreciate you being on with us. And everybody, thank you as always for being here. We really appreciate it. And I hope to see you in the next one. Goodbye.